The total crypto market cap recently surpassed $2 trillion. Ethereum is setting new all-time highs, and the Bitcoin kimchi premium is back. Hey guys, my name is Sheldon Evans, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications. As you know, YouTube does gatekeep some of this cryptocurrency content here on YouTube, so unless you let them know that you want to see this time-sensitive and often important information, you will miss out. Right, so on my display right now, I have the Ethereum US dollar chart open, and as you guys can see, it's broken to the upside, and we've set a brand new all-time high for Ethereum at $2,150. Now, if you guys would have remembered from my previous video, I did mention that this 50-period moving average does often serve as a support during a bull market, and we can see that happening very clearly here, where we broke below it in the past, and then we closed above it, and we broke to the upside, seeing a strong move. But although still within that triangle, then we broke below it again, closed above it, and we saw a strong move to the upside, breaking out of that triangle. If we zoom out a bit and go back, you'll see that we used it as support back here, we used it as support back here, and when we broke below it and then closed above it, we used that for a strong move to the upside. Now, Ethereum does have a strong move ahead of it. I still do believe. I have not sold any of my Ethereum. I'm still holding it strong. And we do have some fundamental news supporting that as well, which we'll talk about later in the video, along with some altcoin news as well. I first just want to cover the Bitcoin dominance chart, which is falling drastically right now, back past that 57% level, because we did have this head and shoulders pattern form and then break below the neckline, and then we saw a move down to the 56%, 57% level. If we do continue falling back all the way down to the 51 to 52% level, I believe we will see a strong alt season ahead of us. But I also need to explain how to manage your expectations, what you want to see from this alt season, and how to determine when the alt season happens, how money flows from Ethereum to Bitcoin and through alts, and the cycle in which it goes. So I'll explain that later in the video as well. First, I just want to highlight something about the entire crypto market cap, right? So we did surpass $2 trillion, which in itself is incredible news and a crazy thing that has happened. But what the craziest part of this is that not that we hit 2 trillion, but it took us over a decade to get to $1 trillion. And then in a matter of 2 months, we hit $2 trillion. We doubled that entire crypto market cap. And this just highlights how crazy exponential growth is and how it's difficult for us as humans to try and comprehend what exponential growth means. When people speak about Ethereum hitting $10,000, $15,000, $20,000, it's very difficult for us to comprehend that when we don't understand what exponential growth is or what that actually means for movement, right? So if we go back to the Ethereum chart from 2017, at the beginning of 2017, we were sitting at around $9 or $10. Then by mid-2017, April, we were at $40, $42, $50. So that's a 5x gain in just a matter of months. Then a few months later, we were at $100, $96, $97 in May. And most people at this point thought, this is crazy, this has got to be the end, the bubble has to pop very soon. We've done a 10x gain in a matter of months. Yet, had they just waited a little bit longer, we would have seen this exponential move to the upside where it went from $100 all the way to $400. So there was still a 4x gain just around the corner for that. Then obviously most people thought the bubble popped here. We broke back down to $150-ish. But had they just waited on a little bit longer, this movement would have absolutely been eclipsed by the tip of the bull run where we hit $1,500 for Ethereum. This just shows you that exponential growth is very difficult for us to comprehend when we use previous data to try and predict what that exponential move looks like. Often these moves happen very, very quickly, as you guys would have seen when we went from $400 on the 9th of December to $1,500 on the 13th of January. Just in 1 month, we did that huge gain, which in the past took us from $10 to $400 in a few months, yet just in 1 month, it went from $400 to $1,500. So that huge market cap move happened in the shortest amount of time. So it takes less and less time as we enter these parabolic moves for money to flow into the cryptocurrency market. So that's why I do believe we are still very, very early in this bull run. And when people start calling the top very early, I believe they are misinformed because there is a lot that is different this time around, such as money that is locked in DeFi, institutional investment, and more, which we'll talk about later in the video as well. But I just want to also highlight that Bitcoin is a $1 trillion asset on its own, right? So 50% of this cryptocurrency total market cap is currently sitting in Bitcoin, which is crazy to think about considering that $2 trillion seems like a lot of money. Yet if we compare it to some of the largest companies in the world, it is about the same market cap as that of Apple, a little bit more than that of Microsoft, a little bit more than that of Amazon, Google, Facebook, and so on. These are all similar size companies in terms of the value locked into these companies. Yet if we look at the entire crypto market cap at $2 trillion, that is so incredibly small, comparing basically a new financial system or a shift of all the money in the world to a single company on the stock exchange. So we're still very, very early to this. If we do believe in cryptocurrency and you believe that this is the future of money and finance, then you are very, very early to this revolution for that matter. So still a lot of room to grow, but I still want you guys to be able to manage your expectations better and understand how much you can get out of this cryptocurrency market in terms of your portfolio growth and how much money you're expecting to make. And I made a poll on Twitter just a few days ago, or actually earlier today, about this, asking you guys how much you're expecting to get out of your entire crypto portfolio this year. And I highlight entire, and I made it in caps because it is important that you understand what the difference is between holding individual altcoins that are doing 10 to 20 or 100x gains and your entire portfolio value. Now, realistic expectations in the 2 to 5x range seem to be the majority vote here, although there are some people expecting greater than 20x gains for their entire portfolio, which is still realistic. The reason that these 100x, 200x, even 1000x gains for your entire portfolio is quite unrealistic is if you are managing your portfolio's risk correctly and you don't or aren't overexposed to small microcap altcoins, you will see huge growth in your portfolio in a way that is still manageable. I see, and I've been monitoring, some people in cryptocurrency are majorly overexposed to these small altcoins. If you have a small microcap altcoin under a $100 million market cap or $50 million market cap at this point, it's very difficult to find even smaller altcoins that are successful projects during this bull run that are under 10, 20 million. But let's say you do have a few of these. If you have more than 50, 60% of your portfolio in these small cap altcoins, what is going to happen is we are going to reach the top of the bull market, or we're going to start seeing an exponential growth, and we won't be able to time the top of that market. No one will be able to time it perfectly. So instead, when the market reverses, that is when you start looking to take profits. And by that point, it is too late because you are so overexposed to these small altcoins that you can't exit the market. There won't be sufficient liquidity. Most people will be trying to get out, won't be able to get your sell orders in. It's a very risky strategy to have. So in fact, you shouldn't be so majorly overexposed to these small altcoins. They should only rarely be taking up 1 to 2% of your portfolio in total between a few altcoins. You shouldn't really be having 50, 60, 70, maybe even 100% of your portfolio in small microcap altcoins. It's not a very good strategy to have, and it's incredibly risky. Yes, cryptocurrency as a whole is a very risky bet to be in, but if you're here for the long run and you understand the tech behind it and why crypto is so important, then you'll be able to understand or manage your risk better. And I just want you guys to be very safe during this bull run because a lot of people do get burned. If we look back to 2017, only around 1% of people got out of that alive. So, and by alive, I mean with their profits. Most people simply rode through the bear market for a few years and hopefully are trying to make that back. But I want you guys to be safe and understand that there is still a lot of room for growth here, but you have to manage your risk accordingly. I am somewhat of a risk-averse investor, even though I do invest in small altcoins. You guys know at this point that I don't have huge sums of money in small altcoins because it is such risky behavior to do that. And I sort of see the future that a lot of people are going to be burning themselves very, very badly. So in terms of the alt season, I just want you guys to use this chart as well if you want to see how far along in the alt season we are or where we are and what to expect from that. And this is from blockchaincenter.net. You can go check out the altcoin season index there. And you can use this chart to sort of analyze whereabouts in the altcoin season we are currently. So what this does is it takes the top 75% of the top 50 coins performed better than Bitcoin over the last season, which is in the last 90 days. Then that means we are in an alt season right now. If we go historically to all of the charts, you'll see that there's an ebb and flow here between the alt season and the Bitcoin season moving between. So we just came from a Bitcoin season, moved into an alt season, and we're currently peaking around in that alt season. But the thing is that this chart can shift depending on how much interest comes into cryptocurrency. As you guys know, only around 1 to 2% of the world is currently in cryptocurrency, which is so incredibly small that as more money and more interest comes into cryptocurrency, these graphs and models shift and break because we can't actually predict these things based on previous events if we don't have data to go from with this amount of money and this amount of people moving into cryptocurrency. So this is sort of just a guideline to try and understand and for us to try and model what the future looks like. Although often these models break very, very easily, especially when hype and super cycles and major retail interest starts coming into cryptocurrency. It's very difficult for us to chart or predict what that actually means. But we'll look at some additional metrics later in this video to try and understand that better as well. I just want to highlight as well that April is typically a good month for Bitcoin. Historically, we have had stronger gains in April than March, which is historically a very bearish month. As you can see here, generally red. April is generally blue. So in a bull signal, in a bull market at least, I believe we'll start seeing some significant gains for both Bitcoin and altcoins in this April month ahead of us. Now, the Bitcoin is trading near $66,000 in South Korea as the kimchi premium returns. Now, if you haven't heard about the kimchi premium, essentially all it is Bitcoin being priced at a premium in South Korea because money is not legally allowed to flow out of the country. So what ends up happening is Korean exchanges can sort of put a premium on Bitcoin, or it is a premium is enforced on Bitcoin because no one can get Bitcoin anywhere else other than South Korean exchanges. And they don't allow external investors or foreign investors to buy Bitcoin on South Korean exchanges either. So it stops arbitrageurs from trading Bitcoin between exchanges and stabilizing the price. So Bitcoin is often at a higher price on South Korean exchanges for this fact. And this is actually a very good sign, a very bullish sign for Bitcoin, because it means that there's still a lot of interest in Bitcoin right now, and the interest is accelerating, meaning that Bitcoin is 15% higher in value on South Korean exchanges right now. So as more South Korean residents and citizens start purchasing cryptocurrency, this premium is going to increase and accelerate even faster and faster as Bitcoin on exchanges starts drying up, which we'll also cover right now. So Bitcoin miner net positive change is another metric that we can use to understand how Bitcoin is going to move and if we're going to see a huge sell-off. So as you guys can see, the red essentially indicates how much Bitcoin miners are selling. So as you guys know, how the network works is that miners mine Bitcoin, they sell it all for a profit, and in exchange for providing computational power to the network. Now, Bitcoin or Bitcoin miners are currently hodling a lot of the Bitcoin that they're mining because they understand that the value of Bitcoin is going to continue going up. So they're more likely to make more money by holding their Bitcoin temporarily and then selling it off as the market reaches a peak or as Bitcoin starts really accelerating in price. So we have seen a net positive change in terms of miners holding more of their Bitcoin than selling it off, which is very, very bullish news for Bitcoin as a whole. We also have the Coinbase IPO coming up. So not just in technical terms, in terms of what is happening to Bitcoin and Ethereum on exchanges and the price of Bitcoin, but also we have some fundamental positive news for Bitcoin and the cryptocurrency market as a whole, right? As these Coinbase, which is a cryptocurrency company, is now going public, and you can buy shares and stock in Coinbase, which I believe will spark a lot more cryptocurrency companies start launching their own IPOs and basically opening up their stock to the world, which I think once Coinbase releases their earnings and they go public, many companies will follow that. And we can see that from will a successful Coinbase offering spur other blockchain and cryptocurrency companies to go public. After the Coinbase IPO, there will be a rush of other crypto companies looking to go public via IPO or SPAC to tap onto the frothy valuation offered by the public markets. So they're expecting Kraken to go public, which I do believe is possible since Kraken does have a banking license. And from a little bit of information that I've gathered, they are looking to open head offices around the world and one possibly in Dubai. So I believe if this does happen, we will see Kraken listed as well as a public company. And if this does happen, like they say in this article, we will see a flood of other companies starting the same thing because we are in the midst of a bull run. So these companies are going to be somewhat overvalued, at least temporarily. So if there was a better time to launch an IPO, it would be right now during the crypto bull run, right? Because there's so much interest on cryptocurrency and cryptocurrency related products and companies that this is probably the best time to do this. That is why even during this time, we see tons of new altcoins and cryptocurrencies being launched and launch pads happening like crazy because they are trying to capitalize on this bull run. While there's still this massive interest on cryptocurrency right now, it will eventually die off. As much as you don't want to believe that cryptocurrency is going to be around and then it's just going to be mainstream, there is still going to be a peak and then a dip. Even if we do see a huge exponential growth, it's not going to go up and then simply stay up there. There will be a crash, there will be a dump, because that is just the nature of humans and the nature of markets and the ebbs and flows of the movement of money, right? This is going to happen, but it doesn't mean that we can't capitalize on what we have right now and the hype that is happening right now. Then I also want to highlight Ethereum on exchanges. So this is also another very bullish sign for Ethereum and crypto in general, that the Ethereum on exchanges is drying up. So most people are purchasing Ethereum on exchanges and then withdrawing it. And we have seen large amounts of Ethereum buys happening. So this could also signal that institutional investors are now looking to Ethereum, which, as you guys know, I believe that Ethereum will be the next store of value cryptocurrency after Bitcoin. And after EIP 1559 is implemented, as well as a variety of different aspects implemented into converting Ethereum into a deflationary asset and moving over to proof of stake and so on, these things are going to accelerate the price of Ethereum. And I believe that is what will help us get to that $10,000, $15,000, $20,000 level for Ethereum, at least within this bull run. There is a lot of bullish news surrounding this, and the technical side of this also points to Ethereum having a very strong move in this bull run. So I still do have quite a large amount of Ethereum that I'm holding, and I don't plan on selling much of that anytime soon. But you guys do know that I do flip some of my hodl portfolio now and again if we do have news that, for example, ADA or Polkadot or something will have a large move coming up. I might capitalize on those short-term moves, which I highlight in my Patreon as well. And then I also want to cover DeFi Pulse. So this is another factor or another metric that signals that we are in a huge bull run and potentially could be a super cycle. So just at the beginning of the last year, in April last year, or let's say 1 year ago exactly, there was around $750 million locked in DeFi. We are now 50x that at around $52 billion, or more than 50x that at $52 billion locked in DeFi. So this is crazy news, or a crazy stat to think about, that there's $50 billion that is locked up in smart contracts, in DeFi protocols and so on. This is money that is not necessarily going to sell off immediately as we start heading into the bear market, right? After we peak after the bull run, this money doesn't necessarily just disappear, doesn't vanish. People don't sell all their holdings. What we're seeing here is a shift from traditional financial markets over to decentralized finance, DeFi, right? And this is what is causing huge retail investment and retail interest. First, they come in with NFTs. Most people hear about NFTs from celebrities and news headlines and so on. Then they realize that there's actual use case for their money, and they can move their money from traditional financial systems like banks and savings accounts and so on, and move it into DeFi and actually earn much better yield. Why would you keep your money in a savings account if you can get 0.1% in a savings account, but 5, 10, 20, 100% APY in DeFi? Yes, those APIs will drop over time, but generally it's going to be a lot higher than the traditional financial system, and most people are realizing this now. That's why we're seeing this exponential growth in money being locked away in DeFi. So it's just a matter of time before this number just continually increases to the point where we have tens, hundreds of billions of dollars locked in DeFi. We also have Shopify CEO hinting at possibly implementing cryptocurrency payments. So he just inquired on Twitter, Toby Lutka, which is, I think his name's Tobias, hey DeFi, Twitter, what are the commerce-related opportunities that you are most excited about? What role do you want Shopify to play? So this is hinting that he could possibly look to integrate crypto payments or some form of crypto payment into Shopify. And this is a very interesting thing that is quite bullish. As you guys know, I've spoken about this many times, why I'm so bullish on e-commerce based cryptocurrency projects. Since there is so much money in commerce and e-commerce, once we can bring that over to cryptocurrency, that will signal the real move of mass adoption and really accelerate that, because then everybody can be opened up to cryptocurrency. Yes, we have these crypto payments that are happening with Visa and MasterCard and so on, but what is happening is currently those crypto payments are then being converted back into fiat. What we really need is a payment option that is in crypto that stays in crypto, so that we can keep that ecosystem alive and keep the money within the cryptocurrency ecosystem. And this is actually a very big advantage for the companies behind this, like Shopify. If they do decide to implement some sort of cryptocurrency payment, this would be a very good thing, because they can put that crypto money or those crypto payments to work, right? Just as I said before, there's money locked in DeFi right now. That's exactly what Shopify could do. They could immediately start taking those payments, and instead of selling it off for fiat, they keep it in stable coins and start earning yield on it immediately, or start shifting it around to different DeFi protocols and lending systems and earning interest on that those crypto payments that they've just received. And this will really skyrocket the price of not only Shopify stock, the value of Shopify, and the adoption of mass crypto payments and crypto adoption in general, because people will start using crypto, and that crypto will immediately start working for them as well. And then once they start seeing this, we'll see a lot of other cryptocurrency or a lot of other traditional companies start hopping on the board of accepting crypto for payments, like we've seen with Tesla accepting Bitcoin as a payment, right? They vowed to not sell that Bitcoin. They know that the value of Bitcoin is going to go up, so it would make no sense to sell that Bitcoin for fiat. So they're holding that Bitcoin, they're going to keep it locked away, it's going to increase in value, and therefore their company is going to increase in value. So it's very smart in the way that they're doing this by vowing not to sell their cryptocurrency. Now, this is still very early days for Shopify. They don't have anything installed. This is just the CEO inquiring on Twitter. And it says that he's been experimenting with some smart contracts as well and just trying to understand exactly how it works and if there is room for improvement. So it's a very, very smart thing that they're doing. And in terms of shopping and e-commerce as well, you guys know that I'm a fan of shopping.io, which, by the way, has been doing insane moves lately. And I want to comment on what would happen if Amazon or Shopify start accepting crypto payments, right? Shopping.io is a crypto-first company, right? Or crypto-first initiative, whereas Shopify would be looking to add cryptocurrency on top to their current system. So there's two different ways that you can think about this. For example, if Amazon started accepting crypto right now, that would be a very good thing for Amazon, but it would be not necessarily a competitor to shopping.io, because shopping is a crypto-first platform, meaning that they'll be able to accept any cryptocurrency. As you guys know, shopping.io is making partnerships left, right, and center with pretty much every other cryptocurrency out there and accepting any ERC20 token as a form of payment. And you can then get paid in SBI token and get an additional 2% discount on those orders that you make. Now, the difference is if Amazon or eBay or Shopify started accepting crypto payments, it would be very difficult for them to offer the same incentives that these crypto-first platforms like shopping.io offer, like free shipping worldwide, like not having to set up an account with Amazon or with eBay or with Walmart or wherever you're ordering from, or having a use case for the token SBI and GSBI, the governance token, and earning yield on that natively on the SBI finance site and the GSBI finance site. So these are things that happen differently when we're comparing traditional world companies like Amazon and Shopify and so on to crypto-first companies like shopping.io. They'll be much faster to implement, much faster to change. They're a dynamic company. They're not static. Amazon and these larger organizations are very slow movers because there's a lot of regulation, there's a lot of papers that have to be signed, there's a lot of things that they have to go through in order to progress forward, right? And they're slow movers because of that. So first movers and quick movers like shopping.io, Origin Protocol, which we'll talk about in a second as well, all of these crypto-first platforms are always going to be faster and ahead of the pack. But with that being said, they're not even necessarily competitors to Amazon, Shopping, and Shopify, and so on. Like they've said, if you follow some of their AMAs, I'll suggest joining their Telegram. They had one recently where they said that if Amazon or Shopify starts accepting crypto payments, they're not necessarily looking to compete. They'll collaborate with them. As you guys know, shopping.io is actually an AWS partner, so it means they're partnered with Amazon. They're incubated by them. So it's a good project because they're not looking to compete. You guys know this. Compete is not the word that we're looking for here. It is collaborate. We want everyone in the cryptocurrency industry with traditional markets and industry to collaborate with one another and build a solid future for crypto and payments and so on. So let's move into some altcoin news. So as you guys know, shopping.io is making crazy partnerships. They did have 3 centralized exchange listings in 7 days. They had MXC, Gate.io, and KuCoin. And they also listed their governance token GSPI on KuCoin in the same time, which is insane for such a small baby cryptocurrency to get listed on a major exchange like KuCoin, which is madness. So I do suggest go check out shopping.io if you haven't yet. As you guys know, I've placed orders through them. I've ordered this microphone and a few other pieces of tech, and it got delivered seamlessly, and I got a 12% discount on that, which is great. Let's talk about Origin Protocol. As you guys know, this thing has just been mooning like crazy lately. When I first called it out, it was 70 cents or so. It's currently $3 right now. We've had a strong move over the past month, and it's reflected in the price because they did just launch on margin on Binance futures with up to 25x leverage. And I want to talk about leverage for a second here, which is another reason why we see these huge moves in the market. So we are seeing huge dumps and huge rises in both Bitcoin, Ethereum, and pretty much every other cryptocurrency because of the new advent of futures, right? And of leverage trading. If you have a small amount of cryptocurrency, more people have large leverage, meaning that you don't need a lot of cryptocurrency or a lot of money to move the market. You can really move the market on your own. If you do have a good amount of crypto, you can move pretty much whatever cryptocurrency you like. And we're seeing that happen more and more recently with these huge leverage amounts, which is why we see these massive red candles when we do see a dump, because people are getting liquidated like crazy with leverage. We didn't really see this back in 2017 because there wasn't much leverage. Most people weren't trading with leverage. Binance was still very new. It was a new exchange. But now, as we can see more and more cryptocurrencies being offered the ability to be traded with leverage, we see huge moves in the market and huge liquidations and these huge red candles because of how much money is actually flowing. For example, let's say you have 25x leverage or 50x or 100x leverage. That means you can play with 100x more money than you actually have. And if you have 1,000 people, 10,000 people, 1 million people playing with 100 times more money than they actually have, you can see how the market can move crazily with these huge movements with leverage. So I just want to highlight that. Origin is also just listed on a few new exchanges, and they do have the launch or the NFT drop with Lupe Fiasco. As you guys know, I've mentioned before that I believe Origin is going to be the go-to platform for large traditional celebrities to come over to cryptocurrency, which again is helping with crypto adoption, right? We see these celebrities and huge names in the real world or in the regular front-facing world, not our little crypto world that we have, because it is actually a very small world that we're in right now. We have these huge names bringing tons of adoption and tons of eyes over to cryptocurrency. So keep an eye out for the NFT drop. If you do want to be able to get into that, just check on 12th of April. That is when it's going to be happening. So also reflected in the Origin price, as I've just said, currently a $600 million market cap. This thing still has a lot of room to grow. I do believe it's $1 billion cryptocurrency in the making. Still very, very small in my opinion. I am a big fan of Origin protocol. Like you guys know, I do actually use it. I've also got another piece of news here about the silent crash for the floor of NFTs. So this is something that I want to highlight as well about protecting your money. As you guys know, I spoke about earlier in the video about protecting your altcoins and your gains in altcoins by not being overexposed to them. I want you to understand how you can lose a lot of money with NFTs, which I mentioned in my NFT video actually. When the price floor of NFTs collapse, there's no coming back from that. There's no way to liquidate your assets. One of the major problems with NFTs right now is the lack of liquidity. If you purchase an NFT for $69 million, as we did have recently with one of people's artwork being sold for that much money, it's very difficult for you to liquidate that. You can't really sell that artwork because you need to find someone who's willing to pay either $69 million or more than that if you want to turn a profit. And if there aren't any buyers, you're going to be stuck with this asset that no one wants, and that is simply lost money because they're not going to be buying it for a lower price. They're just not going to be buying it at all. We can look at this from the chart or the interest of NFTs. So as you guys know, it peaked recently at 100% or like 100 on search volume on Google Trends. Now, we did have a bit of a decline, but in this slight decline, most people aren't going to be looking to buy these super high valued NFTs anymore because the hype just is not there. So let's use this as an example chart. Let's say we're right at the beginning here and you start seeing NFTs that are highly valued and you purchase NFTs around the 55% mark, right? Now you've purchased an NFT that is worth $100. It goes all the way from 50 to 100 and your NFT is 10x in gain. Now it's $1,000. Now you're sitting with an NFT that is valued at $1,000 and there's buyers putting in these orders, sending you offers for $1,000 for your NFT. But the market sentiment changes and the market starts going downwards. So the NFT interest hype starts going down, and let's say it goes further and further and further down. Now your $100 artwork or your $1,000 artwork at the point is $800. Then it goes to $500. Then it goes to $250. Then $100. And the price drops very, very quickly because in a descending market, people aren't going to be looking to buy these highly speculative items because they understand that the market is going downwards. And in order to get rid or offload your NFTs, you need to find a validated buyer, somebody who's willing to pay that full amount to purchase that NFT. It's different from purchasing cryptocurrency. When the market is declining, you can easily liquidate your positions, you can sell your cryptocurrency. You can't do that with NFT. So I believe we're going to see this huge instantaneous crash for NFTs, which is what's highlighted in this article. That in a silent crash, speculators might not even be aware that one is underway. Buyers simply evaporate and sellers fail to move their wares. However, metrics such as floor price, the lowest price at which an NFT can be bought for a particular project, as well as the total volume, can indicate that a bull is turning into a bear. So it's essential that if you are holding NFTs, if you are speculating on the price of high valued NFTs, you understand that the sentiment can change on a dime. And if this does happen, you're going to be stuck with high valued NFTs that you can't get rid of. So guys, I want you to be safe with this as well, that your value of your NFTs aren't going to decline slowly after time. They're going to simply go from a huge peak to zero, to nothing. So be very careful with this. Be careful with speculating on very high priced NFTs. Although, like I've said, there are some implementations for NFTs that aren't speculative art pieces that have massive use case, and I believe is what is going to bring huge adoption to cryptocurrency. I believe NFTs are highly valued in terms of their utility aspect, which is why I am still very interested in NFTs. It's not that I don't believe in NFTs at all. It's just that I believe that the speculative nature in terms of artwork for cryptocurrency might be in a bit of a bubble right now. But with that being said, we're still very early to the cryptocurrency market. Don't get too worried yet. We've still got a lot of room to grow. And as you guys will see from this, why younger investors are coming to cryptocurrency. As you guys know, we are a digital first generation. More and more younger investors are having access to money or getting more and more buying power, and getting their own credit cards, getting their own cryptocurrency. And that is what the point with cryptocurrency is that it gives anyone buying power, right? If you're 5 years old or 10 years old, it doesn't matter how old you are, you can still use cryptocurrency and you can start purchasing things, and people can give you money and your parents can give you money and so on. There's a lot more buying power shifting to the younger generation. That is why we're calling this one of the biggest wealth transfers of history, because a lot of that money is moving to the younger generation. And with the younger generation, they are a digital first generation, meaning that they're going to look to DeFi first before they start looking to traditional financial institutions. And we'll see that old legacy money move to the younger generation and then into DeFi. So we still got a lot of room to grow. With that being said, I hope you guys liked the video. If you did, don't forget to hit the like button, hit the subscribe button, and as always, I shall see you in the next video. Cheers.